Historians generally emphasize Amsterdam's merchant dynasties, the Medici family in Florence, and the birth of central banks in the 18th century when explaining the rise of modern banking. The growth of trade, the evolution of the system. The story is always the same, but what if there is a missing piece in that narrative? What if there is another starting point, sealed in monastery archives and locked inside stamped chests, that does not appear in today's textbooks? What if this story did not begin in the 18th century at all, but with a system that was never supposed to exist? In 1743, in the German city of Frankfurt, a child named Mayer Amschel Rothschild was born. By the time of his death in 1812, his family controlled the largest banking network in Europe. Official records describe this as a dynasty built from nothing, the transformation of a poor trader into a financial genius. But the documents whisper something else. Rothschild did not build a system. He took over one that already existed, a network stretching from Portugal to China, with branches even in cities where sophisticated finance was never supposed to exist, a network whose records predate the supposed invention of modern banking by centuries, the Tartarian banking network. And when the takeover was complete, every trace of that old system was erased from history. The first clue is hidden in architecture. Across Europe and Asia, buildings now used as banks, courthouses, or government institutions share common symbols, ornate facades, specific geometric patterns, columns, domes. Despite being in different countries, they possess surprisingly similar interior layouts. Vault basements that extend far deeper than their official construction dates suggest. And most strikingly, buildings that appear in centuries-old paintings and maps are claimed by local histories to have been built in the 1800s. In Frankfurt, London, Paris, Vienna, and Naples, Rothschild banking houses occupied many of these structures. Architectural records confirm that these buildings already existed, yet the narrative claims they built this empire themselves. Documents allegedly extracted from a sealed archive in the Ural Mountains describe a network called the Houses of Value, which existed long before the modern era. These houses functioned like banks, but under different principles, issuing certificates backed by gold, silver, and grain, operating transfer networks that covered thousands of kilometers within days, and charging no interest. The system was not based on usury, but on transaction and storage fees. And here lies the breaking point. The first thing the Rothschilds changed upon taking control was the mechanism of interest-bearing debt, the foundation of modern banking, the mechanism that for 3 centuries has transferred wealth from populations to banking families. In the 1760s, while Mayer Amschel Rothschild dealt in rare coins and antiquities, he encountered documents describing the old network. Official records say he learned banking through the House of Oppenheimer. But a private letter briefly appearing at auction in 1923 paints a different picture. In a letter allegedly written to his son Nathan, the following lines appear. "The old system remains active beneath the ground. The houses stand. The vaults are full. What must be done is not to build but to occupy. The families operating the infrastructure have dispersed or been removed. It now awaits its new masters." The letter was purchased by a private collector and has never been shown publicly again. If this letter is authentic, the question is clear. Did the Rothschilds build an empire, or did they seize a financial order that had existed for centuries and simply rename it? And if such a system truly existed, why is there not a single line about it in today's textbooks? The Rothschilds did not slowly construct a banking network over generations. Within a single generation, they expanded rapidly across Europe and established major centers simultaneously in 5 capitals: Frankfurt, London, Paris, Vienna, and Naples. Each center was managed by one of Mayer's 5 sons. Each operated in buildings that architectural evidence suggests already existed. Each had immediate access to a sophisticated financial infrastructure that would have taken decades to develop from scratch. They did not build the network, they inherited it, or more precisely, they took it over. The original operators of the Tartarian banking system were referred to in old documents as the custodians. The Ural archives describe them as a hereditary class trained from birth in the management of value and transfer protocols. They remain neutral in political conflicts, serving both sides equally. Their knowledge was preserved carefully through family lineages spanning centuries, and then between 1760 and 1815 they vanished, not gradually, not through natural decline. Within a single generation they disappeared from historical records, precisely as the Rothschild network emerged. What happened to the custodians is not explicitly stated in the documents, but references to displacement and transfer of authority appear repeatedly. Displacement implies the coordinated removal of one banking class and its replacement with another. Before diving deeper into these findings, the financial mechanisms, architectural evidence, documentary traces, and the deeper question of who controlled global finance before the modern era, make sure you are subscribed if this kind of investigation interests you. It helps support the research and allows me to continue these long, deep analyses. Thank you. Now, as we move to the next section, we examine what the Tartarian banking system actually looked like and why it was replaced with something fundamentally different. The Tartarian system was decentralized. All houses of value operated independently, connected by protocols rather than hierarchy. There was no central bank, no single control point, no institution capable of dictating terms to governments. The Rothschild system was the opposite. Centralized, hierarchical, designed to concentrate control within a single family network. The 5 Rothschild houses did not compete with one another. They coordinated. They shared information across borders. They moved capital together. They presented a unified front to governments and institutions. This gave them immense power. A king who opposed one Rothschild house faced all 5. A government that defaulted on a loan found all credit lines closed. A nation that threatened Rothschild interests faced coordinated financial pressure. The Tartarian system served trade. It provided stability by facilitating commerce. The new system served itself. It accumulated power and rendered states dependent on debt. This transformation occurred within a single generation, and no one explained how interest became normalized. The interest mechanism requires special attention. According to the recovered documents, the Tartarian system explicitly prohibited interest on loans. This was not merely a religious prohibition, though many religions shared this stance. It was a practical principle. The documents define interest as the extraction of value without production, and warn that interest-based systems inevitably concentrate wealth and ultimately collapse. Tartarian bankers understood compound interest. They knew that any system allowing perpetual accumulation of interest would inevitably transfer all wealth to lenders. They designed their system to resist this outcome. Storage fees for commodities, transaction fees for value transfers, service charges for document verification. These fees were capped and proportional to the actual service provided. They could not compound. The Rothschild system removed these limits. Loans carried interest. Interest compounded over time. Debts grew faster than economies. Within a century, European governments were indebted to the Rothschild network in amounts they could never fully repay. By 1815, the family was financing both sides of the Napoleonic Wars. By 1850, they had influence over the gold reserves of the Bank of England. By 1900, their network had either established or exerted influence over central banking systems across the Western world. This was not organic growth. It was systematic value extraction built upon a mechanism the previous system had explicitly prohibited. The architectural evidence becomes even more meaningful when you examine the vaults. Modern banks require security. They build vaults, but the vaults beneath buildings associated with Rothschild are different. They are deeper than their official construction dates would require. They are larger than the declared purposes of the banks would justify, and they are interconnected. In London, tunnels connect bank vaults throughout the financial district. In Paris, underground passages link supposedly unrelated banking buildings. In Frankfurt, former Rothschild properties sit atop a network of chambers extending far beyond property boundaries. The official explanation is that these tunnels were constructed for security purposes, to transport gold without exposing it to the public. Yet the stonework is older. The construction style does not align with 19th century engineering. The dimensions are larger. The layout suggests the tunnels predate the buildings above them. The banks did not build vaults beneath the buildings. They built the buildings over vaults left from the previous system, vaults inherited from the old system, vaults used by the Rothschilds, but not built by them. The Napoleonic Wars provided cover for the final consolidation. Between 1803 and 1815, Europe burned in conflict. States required funding for armies and campaigns. The Rothschild network supplied it, but under extraordinary conditions. The family did not merely lend money. They demanded control. Control of central bank policies, control of government bond markets, control of gold reserves. When Napoleon fell, the Rothschilds were no longer simply financing governments. They were governing them. And during those same wars, the last traces of the old banking families disappeared. The custodians who had maintained the Tartarian system for centuries left no visible trace by 1815. Their records were confiscated, destroyed, or hidden. Their buildings were occupied by new owners. Their protocols were replaced with Rothschild procedures. A financial system that had operated for centuries was erased within a single generation, and the new masters took their place in the history books. The gold question reveals another layer. According to the recovered documents, the Tartarian banking system possessed vast gold and silver reserves backing its certificates. When the Rothschilds took control, they inherited those reserves as well. But the quantities do not align. The gold visible in Rothschild vaults after 1815 exceeds what could reasonably have been accumulated through their known commercial activities. Rothschild's alleged manipulation of the London Stock Exchange after Waterloo, obtaining early knowledge of Napoleon's defeat and buying while others sold, made him wealthy, but not wealthy enough to explain those reserves. The gold came from somewhere else. It came from the Tartarian vault seized during displacement, stored in the same underground chambers built by the old system, transferred into Rothschild possession without any recorded documentation of acquisition. This is why the family's early history is so thinly documented. This is why genealogical records prior to Mayer Amschel appear suspiciously sparse. This is why architectural evidence contradicts the official timeline. They did not earn the initial capital. They confiscated it from a system they erased from history. The implications extend beyond finance. If the Tartarian banking system truly existed, and if it operated on principles fundamentally different from modern banking, then everything we believe about economic history must be reconsidered. We are taught that modern banking evolved naturally, that interest-bearing debt was inevitable, that concentrated financial power is the only way complex economies can function. But the Tartarian documents suggest an alternative once existed, a system without central control, a system without compound interest, a system that served trade without extracting value from it. It was not destroyed because it failed. It was destroyed because it succeeded too well, because it distributed wealth rather than concentrating it. Because it could not be used to control governments and societies. The Rothschilds did not improve banking, they corrupted it. They replaced a system designed for stability with one designed for extraction. And since then, they have controlled the narrative. The modern banking system we know today is the Rothschild system: central banks, compound interest, debt-based money, concentrated control. Every element can be traced back to the changes implemented after displacement. The Federal Reserve, the Bank of England, the European Central Bank, all built on Rothschild principles, all operating through mechanisms the Tartarian system explicitly forbade, all concentrating wealth in the manner the old documents warned would lead to collapse. We are living in the late stages of that extraction. Government debts that can never be repaid. Wealth inequality exceeding any previous era. Financial systems so complex that no one fully understands them, except the families who control them. This is too deliberate to be coincidence. It is a design, implemented when the Tartarian system was removed and replaced. A design operating for 3 centuries. A design enriching a few families at the expense of governments and populations. The documents revealing this history are fragmented and suppressed. Portions of the Ural archives were partially destroyed during the Soviet period. The 1923 auction letter has never resurfaced. Architectural studies indicating the true age of banking buildings are dismissed as conspiracy theory. Yet fragments remain, in private collections maintained across generations, in monastery libraries that preserved what secular authorities attempted to erase, in stones that tell a different story than the plaques mounted upon their walls. The truth is there for those who seek it, a banking system that existed before the Rothschilds, a takeover executed within a single generation, the erasure of centuries of financial history, and a family that still controls the gears of global finance. They continue to operate the system they seized 250 years ago. They continue to extract wealth through compound interest. They continue to write histories that obscure their origins. The claims surrounding the Tartarian banking network, the rise of the Rothschild family, and the transformation of modern finance raise questions rather than offer final judgments. Who does finance serve? How does power centralize? Who writes history? Some empires are built with armies, others with ledgers. The question is not whether we remain in the ledger, but whether we understand the system and how to transform it. This work presents historical analysis and alternative interpretations as a framework for educational discussion. Some of the claims here are based on documented historical activities, others rely on speculative frameworks. It is your responsibility to conduct deeper research, examine multiple academic sources, and make financial decisions based on independent evaluation and professional advice. My friends, if this narrative has sparked new questions in your mind and you want to explore the layers behind visible history together, subscribe to the channel, support the video with a like, and turn on notifications. Because in the next file, we will turn another page of the book together.